Hi, this is Dr. Paul Inselman, and welcome to the next edition of News That You Can Use: Financial Health and Financial Independence. Unfortunately, according to statistics, most chiropractors will never reach a level of financial independence, and that is sad. What I'd like to discuss today are several key factors that will put you well on your way to achieving financial independence. Number one, you must have a written budget. If you are not operating your business like a business, you are destined to fail. Businesses must be run with profit orientation in mind. Businesses must be run with the idea towards keeping expenses in check and also making investments that will give you a return on investment or an ROI. Next thing, all businesses must have a cash on hand account. A cash on hand account is an emergency fund that should you have a problem 1 month, if you don't get your receivables in, or if you should have an injury that causes you to close your office for a short period of time, whatever the case may be, if you should have a shortfall of income, a cash on hand account is there to help you carry those month's expenses. The cash on hand account should have 3 months of living expenses personally and 3 months of business expenses. Now, I know what you're going to say. Hey, Paul, I don't have an extra $30,000 or $40,000 lying around. I understand. What you need to understand is that is the goal that you're shooting towards. So start to put money away in a separate account and call that your cash on hand account. The next account you must have and maintain is a tax account. Let me tell you something. The last person you ever want to get into trouble with is the Internal Revenue Service. You never want to owe the IRS money. Let me give you an example. Does the name Willie Nelson ring a bell to you? Do you remember when Willie Nelson had tax problems? The IRS went in, auctioned off his house, auctioned off his personal memorabilia, and they got their pound of flesh. You never want to be in that position. So as a result, sit down with your accountant quarterly and make sure that you have your estimated tax payments on par. Make sure that you are putting enough money away that at the end of the year, at April 15th, when your accountant says, hey, you owe X amount of dollars, you have them. The mechanics are simple. Open up a second account, call that your income tax or tax account, and never ever touch that money until you have to pay Uncle Sam. A good, easy way of doing it is take 33% of your income right off the top and put it into that account. One of two things will happen. You will either have enough money to continue through, or you will be overfunding, and then you can cut back and use that overfunding as forced savings. We're going to continue this discussion in the next YouTube vignette. For now, I want to thank you for joining, and if you have further questions on how to get your finances in check, give me a call in the office at 1-888-201-0567. My name is Dr. Inselman, and again, that number is 1-888-201-0567. Thanks so much for watching. Have a great day.